All right. All right. So what I'm going to be doing is just reviewing at least like two or three markets, and the idea is to basically hone in on the turning point. This is also a Wyckoff specialty. Um, a couple of things he really liked a lot was turning points and climaxes. Okay, so on the left hand side is like a higher time frame. It's almost like a daily, but in the Renko version. Next middle chart is like a middle time frame, right? And on the right hand side is a lower time frame. So the idea is to get an understanding of the overall direction trend from the chart on the left. The middle chart look at support and resistance levels, and the right hand side chart used for entry. So you have an entry time frame, you have a support and resistance time frame, and you have an overall trend time frame. All right. So that's about it. And so we see obviously it's down. How do you know 20 is below the 50 and price is below the 20 pretty much, or it's pulling back to in the middle, which is typical behavior. Pullbacks usually occur within that 20 and 50, within the two moving averages. But we see lower highs and lower lows, right? Low, lower high, lower low, lower high, lower low. All right. And now I think it's trying to establish a lower high. What else you see? I mean, there's a lot of other things like upthrust. Not over here, but this may have been a minor breakout here. And getting ready to test that upthrust right here. So you're right there right now. And that's why I'm trying to find a freaking entry on this. But it's just playing too many games, and it might occur, out of U.S. session, which it's very challenging to. Um, yeah, I think this is also lower low, high volume reversal. So pullback sellers were where? Right on that 9. Some covering here, some. Mm, shoot. Right there, there's some covering from here. Bang. Going up, up, and you're right at that spot. I mean, we'll see if this thing reverses. If it does, it's a very juicy trade. It's right at that upthrust resistance area. So, I mean, it's really looking really right because you have a lower high, possible lower high into a test of high volume area right here with the 9, where the pullback sellers were. And you see as the move is going up, it's decreasing 7 and 6. So I think it's getting ready. It's being prepared. All right. So besides that, let's take a look at the middle time frame. The middle time frame is a retracement leg right there. Let's get rid of all this. Sometimes I can't stand these moving averages. Um, so wait, damn. Here you go. Then it tested here. Then you had your next rally up here. Pull back to test, next rally. It's important to identify the breakouts. You can very clearly see it. See how the increase in volume from 2 to 4, then having follow through, from 2 to 7, then having follow through, right? So right there. And then what happened when it pulled back and it tried to go above here, there were no pullback buyers. So what did it do? It did a spring, right? Anyway, so this right here was an absence of pullback buyers up here. So it had like a kind of like a reverse breakout or profit taking, whatever you want to call it. You know, when the breakout buyers are not there, you have to be careful because chances are it's going to pull back and take out stops. It's going to take out a prior low because it's looking for liquidity and whatever all that shit. So, and we're right at that spot where it's going to attempt to break out again. So that's what I see here. So there was selling. Put where the profit taking was. Right there. Profit taking or reverse breakout. Why? Because 5 is great. It went into a breakout position, meaning it up thrusted right here, right? So it went into a breakout position and the volume came to the downside. So it's like it's not really profit taking, it's really a reverse breakout. I mean, that's technically it's correct, but there's no term like that. So there's a reverse breakout all the way down. Pullback buyers came in. See, the 5 is greater than the 4 and the 1. So buying pressure came in, had follow through. So I think it's not ready to really break just yet. We'll see if this level, if it get up thrusted or there's selling pressure coming in, etc. Anyway, by the way, it doesn't look on the left hand side. It looks ready, but on the middle chart, it does not look ready. Right, so it needs a little bit more, but I think that I mean there were no breakout buyers there, right? So let's see if they're there now. That's the question. Are they still there? Because it did a spring, and oh my, there's a spring of this low. Found pullback buyers. Now we'll see. All right. So now the next step, what you want to do is start what? Start looking at these turning points and see how they occurred. All right, very important. All right. All right. So how did it occur? Price is going down, goes into spring position. What happens next? Lo and behold, the biggest volume in about 8 waves, and it has a higher high. What does that do? Establishes trend. Why does it do that? Buying, which is your change behavior. I don't see any volume off the bottom, but you do have confirmation. And then you have these low volume pullbacks, and it goes up. Now I don't know how big this trend is going to be. I don't because it's going for that area to see if it can crack through, right? Let's see. So this turning point, which I just analyzed in front of you, again, you have your change of behavior. Do you have a climactic background? You do. I forgot to mention that. You see over here, there's the biggest down volume in 18 waves, probably because of this breakdown here. And that set up the climax. There's your climax. There's your covering / buying. There's your secondary test, which is still too much high volume in my opinion. There's your pullback buyer stepping in. There's your breakout right there on the 7. There's your follow through. There's your pullback to test the breakout and continues higher. Here, you have your breakout right there, 5, and you have continuation. So there's no evidence of, whatever, reversals. So you have to be careful if you're thinking of a short. All right, so I'm done with analyzing this, the 4 right here. Done with analyzing this turning point. How did it turn? That's the question. How did it turn? It turned because there was a climax and there was a change of behavior that was identified by volume, not by price movement, meaning it's not that much price movement. It was identified by volume, meaning down you had your climax, typically is identified by volume, but change of behavior is actually typically identified by the amount or the size of the wave, not by just the volume of the wave, but first and foremost by the size of the wave in terms of price. That's my opinion. Some will say it's all volume, but I think no. I've seen too many indications that say that it's the price, the distance of the wave that identifies the sign of strength and or the sign of weakness or the change of character or the change of behavior. And yes, it will have high volume, no doubt about it, but it'll have the highest or the most distance, meaning from low to high of the wave, will be it will have a lot of distance. Like in this case, the distance is not there and it's the volume, but typically it's price. All right, so we're done with this. How did the turning point change? The turning point turned based on a climax, a change of behavior and volume, a higher low and a higher high. That higher high had a breakout. It had all of the indications. Which is the bar that broke the back of the trend? That would be this. That's the breakout, breaks the back of the trend. And that's it. All right. Is there a hinge? No. Is there volume off the bottom? No. Is there effort? No. Is there even cause? No. But the trend occurred nonetheless. As you see, higher highs, higher low, higher high, higher low, higher high. Not the best type of trend, but whatever. What gave validity to this as a trend change was if you just have a leg, like a leg, it doesn't mean nothing. What helped give it is the background. What made this sign of strength a stronger sign of strength was the climax. It's the climax that gave it a very strong indication, followed by a break above the climax. It took out the climax high here in this area. Took out that area. It took out the climax. The climax was heavy volume and it took it out. And anyway, so we're done with this. Let's take a look at the next turning point. The next turning point there's effort over here. I mean, it's a big wave. And then, oh, right there. What set this up is right there. Take a good look. That right there is volume off the top. And it's fine. You can call it a climax. You can call it a change of behavior because it's a down break, whatever. But selling, that's all it is. So you have, where is this? Volume off the top. Volume off the top that takes out these prior two lows. So you have a break. And from this volume off the top, that's most volume in about 35 down bars. It's not really that much, but it gives validity that they're establishing a position. And it took out the lows. All right, so that's important. Otherwise, I mean, just a wave down by itself can mean many things. It can mean, it could be a spring to go higher. But the fact that there's selling at the top is good. And then the first pullback is also important because it's a low volume pullback. So what gives validity to this is your volume off the top. It takes out multiple lows, at least two lows, right? That one low, it could be a change of behavior, but like it's much better if it takes out multiple lows because that means there's cause in the background. So it does that and then has a low volume pullback. Low volume pullback. I can't find right there. That's the first test. That's the second test. So this, how do you know it's low? 14 to 6. So this pullback is less than half the volume. And then the final one, which is like the coffin, that's your lack of demand. No question that that's the lack of demand. If Wyckoff would be explaining this to you, this to him would be like gold. He knows. He said that you have to develop the ability to judge big waves and small waves. The small waves are important because after them, the markdown ensues. Doesn't happen after the big wave. It happens after the pullback, retracement pullbacks, and right there, that is the point where the market, takes a nosedive, or enters the markdown phase. All right. So what made this market turn? What made it turn was that on this chart, this is really important, folks. We're at this high. See that high? When we test the high, where's the breakout buyers? Where are the breakout buyers? So in this breakout / upthrust position, it goes up and instead it reverses. This, look at this selling. So instead of the buying volume coming in, selling volume, so they're selling the highs, not buying the highs, and it's a reverse breakout. Bang. And puke fest. All right. And I'll do this one as well. What happened? I'm doing this one right here where, okay. So the market rallies, it breaks out. Notice the heaviest volume in 100 bricks has no freaking follow through and goes down. Then it it uh, it enters a breakout position from the high, and instead of breaking out, you have your reverse breakout, which is right there on the biggest volume in 100 bricks. So it's even bigger than the last one. Last one was big. This one's even bigger. All right. What is that saying? It's saying buy, not interested. It's saying reversal. That's what it's saying. It has follow through, and you have your change of behavior here. Biggest price in distance in eight waves, and biggest volume in at least 25 waves. So, what is that all saying? That's not a spring. No way that's not a spring. How could it be a spring? With all that selling pressure, with selling off the bottom. In springs, right? I think they're looking for volume from from the low, not the high. And I'll start thinking about that a little bit, and because the whole problem is that with Wyckofians is they cannot figure out whether it's a sign of weakness or it's a shakeout, right? That's the whole problem. Otherwise, anybody can see a big wave, and if you're able to distinguish what is it a sign of weakness or is it a shakeout? If you're able to distinguish it, you would know what should you buy or should you sell, right? It would be if you're able to distinguish that, that would give you the idea, hey, should I buy or should I sell? So anyway, so what makes this turn? This turn is the volume off the top. Yeah, right there. Holy cow. Bang. And remember, who sells highs and buys lows? Smart money. That's their footprint. All right. So the volume of the top gives a lot of credibility, and the fact that this low took out the prior two lows. So it takes out. Shit. Hold on. All right. Annoyed. All right. So what happened? You had your volume off the top, and you had your selling. You also had a breakout. I don't know what to call it. I think it was a breakout, but at the same time, it's also a climax. I mean, it's very hard to tell these things. Anyway, so you had your volume off the top, which gives credibility to this not being a shakeout, not being a spring. Why? Because spring is trying to find liquidity below to go higher. It's trying to find volume below, right? Should a shakeout to go higher, but the volume is above. It's up here. So I think that would be it, but I have to double check or triple check because these spring it's very hard to identify the difference. Anyway, so we know that there's no buying up here, no breakout buyers right up here, no breakout buyers. Although there might have been these breakout buyers right here that were pressing. It's difficult to tell. The five led to a 2, led to a 10. Anyway, the point is they failed. If there were breakout buyers, they failed. If there were no breakout buyers, then then you have a reverse breakout. All right, or breakdown or whatever. So makes a lower low below these two tests. Low volume 1, low volume 2. Why? Because it's only 4, whereas the down wave it has 21. So 21 pull back on only 4. What happens? Puke fest. After that, it gets really tricky because you have all of these waves and they're setting up the test. Right here, you have some effort, and look what happened after it. Shakeout. And that's it. That was the end of the move. So how did the market turn here? market turn because of volume of the top and a break below these two lows. Those are the key distinguishing factors. All right, and low volume pullback. Right. So now we've taken 3 turning points, and we have to examine all 3 and see what is their common characteristics. This one had nice price volume with volume off the top. This one here, I don't know what the hell it had, but it had a climax followed by a rally. This one also had a climax followed by a rally that took out the climax high. Right? As you can see, took out this area. So you had a climax, buying, pulled back to test, and took it out. Took out the high of the climax. Let's see if this did the same thing. No, it didn't. This selling failed though. And there was heavy buying right here. That was the biggest buying in about 49 bricks, and the next one was the biggest buying in 55 bricks. And did a confirmation. All right. Okay, I think that's enough for today. Again, some of the things that you might want to do, depending on what it is that you want to specialize in. If you want to specialize in turning points, then you got to learn how a market turns. And you can just watch these videos where I will just be going through a bunch of turning points. Might be extremely boring, but that's one way to do it. And then if you want to do springs and upthrust, just see the price and the volume characteristics on springs and upthrusts. And I'm sure that you'll find common characteristics about, springs at the test of a breakout, for example, and what happens to the volume and price and how shallow the spring is and all of that. So that's all, folks. Take care. Have a good evening. Bye.